podcast. I am your birthday boy, Dividend Dave. Thanks for joining the 50th birthday party. My goodness. Joining me already, I have Tom in Carolina, Charlotte, North Carolina.
Yep, that's
Stuart
right.
in, you're around Ottawa area, Stuart, if I recall correctly? Or Quebec, you're in Quebec. And then
Yeah,
one of my favorite
Ottawa
friends,
and Quebec.
Boomer in
Yeah.
Vancouver. Sorry, Stuart, you said you're in Quebec?
I'm in Quebec right now. Yes.
Cool. Well, thank you guys so much for coming on and spending my birthday with me, my 50th birthday. I can't believe I made it this far. Tom's driving. He's out. What are you doing, Tom? Doing deliveries or something?
Yeah, man, I do side hustles. I'm a free man. I don't do the. Am I the only one from the States right now? Yeah, I'm down in Charlotte, North Carolina. I do some deliveries, work when I want to, don't want to anymore. So
Nice.
it rolls, brother. And sure enough, I wish I could be 50 again. I'll tell you what, I never thought I'd get there. I'm turning 55 this summer. Ouch. I think I could join AARP this summer or something like that. Some sort of old crap like that. They're sending
Well,
me
let's
stuff.
welcome J Treg in 91 to the party. I'm sorry, what's your Twitter handle so we'll know you better?
Yeah, thanks guys. First time checking out one of these things, so appreciate the invitation.
Nice. Yeah. Well, thanks for coming to my 50th birthday party. I was just saying I can't believe that it goes by quick. I think Stuart and Tom will agree. Like, it seems like just 6 or 8 months ago I was graduating high school, and here I am now 30 years later.
Bye.
It goes by quick.
Nice. So
Dave,
I know this question.
I made some.
Sorry, go ahead.
Off today. How about you?
No, I worked today. I was working. Great way to spend your birthday. So I do know this question is going to come up. People are going to ask that question, and I hate this question. I absolutely hate this question. What would you tell your, 18 or 20-year-old self, or if you knew what you know now, what would you have done differently? And so I got thinking about this today. It's like, well, if I knew 30 years ago what I know now, well, that means that for the last 30 years, I knew every Super Bowl, World Series, Stanley Cup champions. Like, I would just bet on sports. Might not be the greatest strategy, hey, Stuart, but if you know the outcome, it seems like, well, why wouldn't I just bet on, oh, yeah, Tom Brady's playing New England, just bet on the Super Bowl. What's going on in the chat? I see we have some people in the chat. Let's jump in there. Let's get some interaction going with the audience. Oh, stock picking bartender. Hey, did you see the link? Grab the link and join in. Oh, I've got more. I didn't even realize I can scroll down here. There's more people coming on here shortly. We'll get oh, Vancouver. Love it. I mean, you know how much I love Vancouver.
I'm out on 4th Avenue right now.
Nice. Oh man, I miss Vancouver so much. Hey, welcome Patrick as well. All Caps Finance. Buy investing shirts. Shout out to Patrick with the Passive Income Posse merch, and you can definitely buy that merch. When the link should be in the description. I think I put it there.
Happy birthday, Dave.
Nice. Are you there, Patrick?
Yeah, I'm there. Can you hear me?
Yeah, I can hear you. I think we're having a little problem with someone's connection. I think it's Boomer there walking down 4th Avenue in the Kitsilano area of Vancouver. My goodness, I love Vancouver. Wish I was there right now.
Did you ever live there, Dave, or was it just you visited?
Oh yeah, I went for a 2-week vacation in 1998 and stayed for 15 years, like most people do. Let's keep the party going here. Thank you guys so much for coming on. Yeah, stock picking bartender. Did you see the link there, stock picking bartender? Not sure if you saw the link or not for him to come on and join the party. The link is pinned at the top of the chat. So anyone who wants to come on, feel free. I think we can have up to 10 people on here, so it'll be a party.
Happy birthday, Dave. I'm going to crack one open for you.
Nice. I did. I think
Nice.
we will break the internet if too many of it on. Hey, that's exactly what we're trying to do, is break the internet.
Hey, Dave, I'm driving. I really can't see, but I wish I were having a cold one. What's everyone? Is anyone drinking a cold one, or if so, what are you thinking? Because I can.
Yeah, it looks like Tom has a stout on the go, a Guinness maybe or something. And I just have a couple tall boys of the old Anheuser-Busch.
You don't even have a Molson Canadian or something good like that? Come on.
Well, the Molson Canadians, yeah. Honestly, they taste pretty much the same as Busch. Not much different than Busch is cheaper.
Yeah, I think they're all made in the same freaking factory. So.
And I do have another one right here, ready to crack. So let's get that right up to the microphone. Oh, was that too loud? Probably too loud, eh?
That was just perfect.
Nice.
Oh, it's good.
Well, thank you guys so much for joining me here in my 50th birthday party. We'll probably talk a little bit too about some different, stocks and investing strategies, and some of the birthday presents too were really nice today. I'm a heavy investor into REITs, as a lot of people know, and so a lot of REITs get paid out on the 15th of the month, which means they settle into my brokerage account on the 16th. So it just feels great every May that happens to be my birthday on the 16th, and all these dividends just show up in my account, and I'm like, oh wow, these are incredible birthday presents. You guys probably saw my tweet from first thing this morning.
Yeah, it's a big dividend day for everybody probably today.
Yeah, exactly. And then I immediately went and, of course, bought more shares in a couple of companies that I'm trying to stack. Bell Canada kind of being one. It's my number one this year right now, is that I'm stacking, and it's because, here's my cell phone. It's a Samsung, but my cell phone bill goes to Bell Mobility, and everybody's heard me say turn that cash register around. So that's exactly what I'm trying to do with Bell is, just stack enough shares that dividend pays my cell phone bill, right? Like that's and maybe someday down the road it'll pay a lot more than just my cell phone bill. So and then I actually didn't buy Bank of Nova Scotia, which a lot of people know from watching the Passive Income podcast that my mortgage is with BNS, so I've been buying shares in BNS. But I actually started a position in TD today. So, what are your thoughts on that idea, Stuart, of buying either TD or Bank of Nova Scotia?
I like TD.
Stuart, are you there? Can you hear us?
I own quite a bit.
Of probably both, right? TD and BNS.
I'm getting a lot of echoes on my system right now, so I'm going to go out and come back.
Okay, sounds good.
Yeah, I got myself some Sun Life shares today. So got
Nice. Yeah,
NAB.
Sun Life is a good one.
Yeah. So I didn't actually. I'm waiting for payday, but I had a bit of money sitting in the dividend account, so I had a bit of money just sitting there. So I figured, why not?
Yeah, that's always nice. Hey, welcome, Master P. Welcome, Master P, to the Passive
Thank you.
Income Podcast. Dave's 50th birthday. My goodness.
Happy 50th, Dave. Well
Thank you so
deserved.
much. Thank you so much. I talked to a lot of people since you and I recorded the episode, and I keep referencing back to how we talked about what it was like to trade stocks and shares in the 90s, and people are just like flabbergasted. I'm like, yeah, go watch the episode with Master P talking about like driving around with a roll of quarters searching for a payphone with a 16-digit pin scribbled on a piece of paper in his wallet. And it's just like,
You had to know your account number. I only had a numeric pager, and you had to call. I used to call like every so often and try to get quotes and whatnot. So it was kind of weird. Then of course, if you had to place any sort of trade, it was just ridiculous.
right, yeah, no, people and when I tell, because like I think I was referencing that just this past month or like a week or so ago, I did a live stream with who I call like the young guns, right? These young adults who are in their late teens and early to mid 20s, and they've just kind of grown up with the internet, and now these days, we all have apps on our phones, and you can just trade with a few clicks of your fingertips, and all the information is right there, literally at your fingertips. And
Yeah.
I'm telling them about you, going, yeah, we used to, or specifically referencing that video, that episode with you, where I'm like, yeah, check out this episode. Like, you drive around with quarters and, and call
Well,
a
not only that,
stockbroker,
but
and they're like, what's a stockbroker?
yeah. Well, I mean, just think about it, right? Like when you call, like there was no real time quotes or charts, right? So you call them, and say you wanted to buy TD because it was down $1 right now, and
Right.
it hit your price target, and you call them, they validate your username, your username, your social security number, whatever it may be, your address, and blah blah blah, and you tell them the order, they repeat back the order to make sure it's correct, and all that can take anywhere from 5 to 7 minutes, maybe 10 minutes. And now TD may be just down 25 cents by the time you just went through all that. So like, do you want to buy it now or not?
Yeah, I think a lot of the younger generation don't know how lucky they are right now with the amount of technology that we have with, our, like I said, our Samsungs or our iPhones, whichever you happen to use, and all the information is just there ready for you, and you can download these free apps, and it's just absolutely amazing. We have another newcomer to the party. Welcome, Craig.
Hey, what's happening?
Say it, Craig. Say it.
Happy birthday.
No. I feel so good.
I know.
Buy it. You'll like
I know
it.
what you want me to say. I'm not a drug dealer. I can't do it. I can't do it. But it does feel good. It does feel good.
I asked you for that clip. Because I'm gonna turn it into a YouTube Shorts. Just it literally, we're getting close to 100 hours of content on the Passive Income Podcast. Like a lot of, we're into episode 75 or 76 of individual guests, 5 or 6 live streams now. So, over 80 hours. And by far, that 1 minute of you is the absolute best clip so far on the Passive Income Podcast.
That's funny. Yeah, I was right. Just off the cuff, man. I was like, just straight from the heart. And then I thought about what I said and I was like, whoa, I sound like a drug dealer. I get so excited about talking about SCHD, buying SCHD, telling people about it. Yeah. How are things going here? You guys, sorry I'm late.
Hey, no worries. No, like I said in our DMs, I'm just kind of expecting people to come and go as they can, and I appreciate you coming by. And again, thank you so much for as you see it there on the ticker below, the me a coffee. Thank you so much. I can't express how much I appreciate that. That's incredible.
No, is no problem at all. Like what you've done for the dividend community. For me, you were the first person that asked me on a podcast for this aspect of my life. And I watched your short video the other day talking about your mom and everything, and that really touched me. So the least I could do is buy you a few coffees, not just one.
Yeah, I noticed that. I noticed that after the fact. I'm like, oh wow, he actually went the full distance on that one. So again, I appreciate that very much.
Hey, it's your birthday, man. On top of all that.
Nice. Has everyone here met? I'm not sure if Patrick is even still here, but
I'm
Stuart,
just chopping some garlic.
Have you guys all met each other? Everybody follow each other on Twitter?
I know Master P, I recognize. Is it Stuart? It's really small. I can't read that.
Yeah. Stuart, his Twitter handle is Stodgy Investor, I believe, or Invest Stodgy, something like that.
How are you doing?
Yep.
Hey, Master P, what's up?
Same.
Yeah, and Stuart, hi. I don't think I've met you before, and
Very good.
All caps. I'm not sure.
Hey, how's it going?
Hey.
Getting supper ready, so sorry about that. Is Master P is Optin Guru? I'm guessing.
Yes.
Yeah. Okay.
Correct.
Okay.
Nice. I do see we have some people watching, but the chat isn't very lively. So let's get some comments going here in the chat for those of you watching, and we'll just see where the next little while takes us.
Yeah. Did you notice? I don't know. You don't see SCHD like I follow, obviously, so you're probably not aware. But there was a big dip today, massive dip. So I went a little crazy. I even ran out of money, so I was selling other stuff, and so I could buy more. So I bought the dip today, big time.
Nice. Hey, welcome, Steve.
Howdy.
Millennial Mojo. Thanks for coming to the party.
Thanks. Happy birthday, Dave.
Nice.
Sorry, I'll let you guys go back to the conversation for a bit.
Before we get in. Yeah, that's exactly what I was going to say. I want to hear more of Craig's the dip on SCHD and where that took you today. Did you see my tweet to you like a couple days ago when you're like, "Oh, my next goal is 1351," and I'm like, "Just change it to 2,000."
Yeah, well, my next big step is to try to get to $100,000 value. So then I worked that out to be like
1351.
Yeah, and that's if it got back up to like the 200-day moving average, right? So that number's going to move, but so that was kind of a rough goal. And yeah, I might be there. I might be that 2,000. I might need to do that the way I'm buying this week. This week it's been coming down every day, and then today it really dropped big time today. So, like I said, I ran out of money, so I'm selling stocks. I'm searching through, what can I get a tax loss on? What's up maybe a little bit that I don't like anymore. I'm like in a frenzy. It's
Yeah, you're like
crazy.
you're searching the couch for quarters to see what you can put together.
Yeah. Oh, it's fun. It's fun. I just, and like I said before, like this is one that I don't worry about. Like the fact that it's an ETF, it helps just being an ETF that it's self-cleansing, and it's always gonna, the bad stuff is gonna drop up and the good stuff's gonna rise up. So in the long run, it always works out. So and something like this that like has a lot of quality in it, it's gonna do well. So I'm really not worried. So to me, you gotta take advantage of these dips. And I think most
Yeah.
people that watch your show and are on here would probably agree. When you really know something and have high conviction, you see it go down, that's a great time to buy it.
Yeah, for
I
sure.
mean, if
Dollar
you're not
cost
buying when
average
it's dipping,
down.
when are you buying it, right?
Right. Exactly.
Welcome Shalini
Hey, that's
to the party.
Shalini. I know her.
Nice.
Hello.
Hello, thank
Do you
you for
hear
coming
me?
out to the party.
Thanks. You're welcome. Happy birthday to you. Happy 50th.
Yeah, thank you. I can't believe I made it this far. Half a century is quite a milestone.
There we go.
Yeah. Vivek,
Sorry,
happy
you'll be
birthday.
hearing
Thank you
back
so much
noise.
for that. Yeah, Shalini and I were supposed to record an episode, about 2 weeks ago, and
Yeah.
we've been trying to reschedule since, and we just haven't made it happen yet. So hopefully soon we'll be able
Soon.
to record an episode.
Yep. I can't wait for that, Dave. I'm waiting for the opportunity.
Nice,
But yeah, let's see how it goes.
nice. And sorry, just before Shalini joined, we had Steve come on too. Steve, are you still there?
Yeah, I'm still here. I just turned off my camera there for a second.
Nice. So welcome to Steve as well. Steve's been on. You've been on twice, I think, before, right? We did a one-on-one,
have.
and you were on a live stream.
Yes. Yep.
Cool, cool.
It's always nice to come
And,
talk to you, Dave.
Oh, I appreciate that. I love this community, and I love the fact that everybody is so willing to come on and spend time with me and talk about their different investment strategies and journeys and paths and successes and failures. And it's just been it's been an incredible 7 or 8 months so far since I started a video podcast.
Yeah, it's fun to be able to learn, like I said, learn from what other people are doing, seeing if you can apply anything that they're doing to your own strategy and see if that could augment what you're doing and benefit you and supplement you. At the
Right.
same time, even just sharing your own experiences, like I could listen to Craig talk about SCHD all day, but it's one of those things of like listening to his conviction on it, like he just said, it's one of those things of like, yeah, it makes sense why people own a portion of it. I have a small portion of it. It's like, yeah, like it reinforces when you hear someone else have conviction. A little bit of it is the bias of like, oh,
Yeah.
he's talking great about it. It must be good that I have it. But you also have to have your own perspective. And I share the same perspective that Craig does a little bit. So it's nice when you have other people that you can agree with and have conviction with as well.
Yeah, I would agree.
Mhm.
And yeah, you're right. Like, and I know Craig has positions in other companies as well, but he's obviously a maxi on the SEHD, right?
Yeah. Yeah. And like I told you when we talked, I have too many stocks. Like when I first got into it, I was really, every time I'd hear somebody talk good about something, I would buy it. let me nibble, like buy a little. If it goes up, woo, and that, it didn't work out that well. Some worked out really well and some haven't. So I have, the benefit is that I have some stocks now that I can sell and move into something I like more. So it's given me some flexibility, and I want to cut that down. I can't follow all those companies, and I don't even understand them all. So I really need to cut down and put into
Nice.
something I really believe in.
If you look at this now, we're up to like the Brady Bunch with the all 9 squares filled in, or what was that game show back in the 90s of the
Hollywood
that had all the
Squares.
celebrities?
Hollywood
Hollywood
Squares.
Squares.
Hollywood Squares, right?
So who's
So,
Paul Lind in the
welcome,
middle
Darth
on your
Dividend.
screen?
Welcome back to Stuart and Boomer. I know you guys were just having a couple of connection issues there, but let's hear from Darth. You're the newest one to the party.
So I was outside in my office. So
Hey, what's going on, Dave? Happy birthday.
Nice. Thank you so much. I appreciate it. I appreciate you being here. And I know it's kind of been short notice for a lot of people. You just kind of saw a tweet said, "Hey, come on over if you have time." So I appreciate the fact that you've made a bit of time here out of your schedule to pop on and say hi.
Yeah, no problem. I literally saw your message. I'm like, what time? And I saw it, like, I clicked your name and I'm like, oh, all right, I might as well hop on real quick.
Nice, nice. Yeah, we've had a few people coming and going already, just like a real party. And yeah, it's been a lot of fun already. Like, I feel like we could go for quite a while here because just, talking to people, we've been talking to, Patrick and Master P and Craig and Steve and Shalini and Stuart and Boomer. And I think, oh yeah, Tom was here earlier as well. Tom from Savings Captain. So, um, it's just, let's just keep the party going.
Yeah, I'm okay with that.
So, any stocks? Did you buy any stocks today? And let's just start with a simple, easy, something to keep the conversation going.
I bought Arbor Realty Trust. I bought USB, and I'm going heavy in the financial sector stocks. Ally, I've been buying. I got dividends from Horizon Technology, HRZN, and I just reinvested them. So I'm pretty excited for that business development company. It's a monthly dividend business development company.
Nice. Yeah, we're all on the same page here. These dividends, whether it's a monthly or quarterly dividend, and you just see that roll into your brokerage account. And I know every single one of us will agree. It's just like one of the best feelings in the world, right? You just see this money. It feels like this money is just appearing out of nowhere, right? Like there it again this month or this quarter. There's another, and it can be like a really small amount. I have a couple in my RRSP, which in the Canadian, that's like a retirement. Uh, and I have one on there that's literally it's 8 cents every month, and I get just as excited about an 8 cent when I see a notification for 8 cents as I do for one that's 20 or 50 or $100. Is like, hey, this money just keeps showing up, and I'm not gonna say no to it, right? And it's like, just keep coming, please.
Right. I can tell you, I had 3 terrible shifts, and literally, I woke up and saw my dividends because, like, being a nurse, especially a travel nurse, you have like some of the worst assignments and locations. I mean, the money's nice, but it beats the crap out of you. And literally, I woke up, I'm like, oh, luckily I'm not working, but you're mentally and physically drained. And then I just saw the dividends, and today I'm like, ooh, this is going to be a good day. That'll cancel everything out.
Yeah.
How many hours do you work as a nurse per week?
What's that?
How many hours per week do you work?
I do 312s. I'm day shift. So, I mean, I just capitalize on travel nursing. So I throw a lot of money in each week, dollar cost averaging, and just buying dips and stocks. So something I capitalized on, it's something with a career, and it's just time to really turbocharge my dividend portfolio.
And so when you say travel, how far do you have to travel on a typical
trip?
I think we lost your audio, Darth.
That means
He's back.
What's that?
Your audio was.
Oh,
it's back now.
But so there's a thing called stipend pay. So as long as you're crossing your T's and dotting your I's, if you're more than 50 miles from somewhere, you get free money pretty much. I'm not going to say how much. I don't want to brag about it or anything, but it's a good amount of money. So I just throw that in my dividend portfolio every week, and or half of that. And I'm in graduate school, nurse practitioner school at the same time, so I like head's going crazy, and I got a YouTube channel and everything. So like I'm trying to keep my sanity. So, but really, it's something I had to capitalize on. I'll probably do that while I'm studying for boards as well.
Right. Yeah, your YouTube channel is doing great. You're up to, I think you're over 15,000 subscribers, if I'm not
No,
mistaken.
not 15. I'm at 12.7K.
Not
I
quite.
mean, I'm getting there. It's fun. I
Okay.
like posting videos on my dividend investing journey. I just do stock and dividend analysis on stocks. I don't try to get too technical, technical analysis, this and that. I mean, with REITs, obviously you want to show FFO like findings and stuff, but I'm sure you guys have seen my posts. I've been heavily loading up on REITs and financial sector stocks.
So what are your favorite REITs?
There's too many.
Don't say no.
I mean, I've been loading up on Simon Property Group. I just saw an article that they're starting to look at hotels, which is pretty attractive. I mean, Agree Realty Corporation, ADC stock is one of my favorites. Realty Income's another one. Arbor Realty Trust probably is my favorite one right now. And, with this Ninja research and stuff, I really hope Arbor takes them to court because they tried to short sell them, it appears. And it's just very crazy the way they tried to downgrade the stock so they can get some money out of it. And it appears that's what's going on. But back to real estate investment trust. I mean, you look at AGNC or NLY or some of these other mortgage-backed REITs. Arbor Realty Trust has just ran circles around every other REIT that's a mortgage-backed REIT, and it's also kept in line or beaten the S&P at times in the past 5 years, which is crazy. And it just hiked its dividends, 42 cents. I think it's $12.75 a share or something, but its revenue has been fantastic right now.
Yeah,
Is it a
actually, I
monthly?
bought Arbor and Realty Income this week, which are different positions for me. Like, I don't own a lot of American stocks, but I've been putting US dollars into my online account, and so I bought both of those this week. And Arbor is, I mean, they have a pretty hefty payout, but it's a different kind of business. It's kind of a REIT. It's kind of not a REIT in my mind, but it's a bit of a different business.
It's well, I mean, they're doing something right. They're very. Go ahead.
I was going to say, while we're on the topic of U.S. or American REITs, I definitely want to hear your thoughts on Vici. That's the REIT that owns a lot of the Las Vegas Strip, and yeah, just what are your thoughts on Vici?
You're asking me or just everyone else?
I guess Darth. You were talking about you're sort of investing in dividends right now. So yeah, you go first, and then
VC
throw it
prop.
to anyone else who wants to respond as well.
Sure. I've been loading up on VC properties for a long time. Its revenue's been good. FFO's been good. And, it's entertainment properties. So literally, people go to Vegas to party. And it doesn't matter if there's a recession or in the middle of a pandemic, people want to party. So, they're a major landlord for those type of, hotels and places for parties, people to party. And I mean, it's Sin City. So, I've been loading up on those guys. I dividends and M1 more shares of VC properties, but them and gaming and leisure properties I own and I'm long on.
I mean, travel stocks in general are doing really good, right? So it should get some of that tailwind.
Yeah, they I mean, you're a bit young also, like you don't remember probably 2007, 2008, all the gaming stocks completely collapsed. Like Sands, which owns I'm not sure if they still own, but they own Venetian, they developed Venetian and the Venetian in Asia and stuff. Their stock went from like $50 to $2. MGM did the same thing. Like all Vegas stocks just completely shit the bed in the credit crisis because they were all building like crazy, and suddenly there was no money available for anybody. It's I've shied away from that. I mean, it's a good dividend. I do think now they're all stabilized. They're better capitalized. When MGM built City Center in Vegas, I don't know if you go to Vegas regularly, but when they built that huge complex with 5 or 6 hotels, it was the biggest construction project in the world for for a like a non-highway or bridge or whatever. But to build for buildings, it was the biggest project in the world, and it happened right in the middle of the credit crunch, and they got in huge trouble, financial trouble, and all those hotels up and down the strip their companies were struggling, and so they've really consolidated into just 2 or 3 groups that pretty much own all of it now.
Hey, Boomer, are you saying that the house doesn't always win then?
Oh, the house still got all the money from the people. They just needed a lot more. Yeah.
Gotcha.
Interesting. Okay, cool. I think we can all agree that the house always wins in Vegas. I didn't leave a lot of money in Vegas. I was only there for less than 72 hours, but I think we've probably, all of us have some money in Vegas.
Oh yeah.
Anybody else buy anything today?
I have to go online. I can't remember. I'm too old to remember this morning.
See what else I got.
I'll log on to my account and look.
This is what you get to look forward to, Dave.
Exactly. Another decade,
I'm
Dave,
already
you'll be
there.
like me.
Believe me.
I bought some Pfizer. I'm trying to load up 100 shares in Pfizer. So currently it's oversold. So I'm trying to. I'm watching the RSI that Master P puts on every day, and then I set some alert on for myself, and yeah, based on the alerts, I started buying Pfizer these days.
Nice. Yeah, Pfizer is obviously a good, solid company to invest in.
Yeah.
Yeah, it's been trading
Good
very
dividends.
low lately. Like it feels like it's got to turn around at some point. And like it does seem like it's one that you load up now and later that's going to pay off. I feel like it looks like that.
It's a nice stagnant price with dividend hikes. I mean, Pfizer's a dividend stock. I mean, that's just the best way to say it. It's amazing their price too. They have so many like antibiotics in the hospital and stuff that are like crucial for people that are like septic or bloodborne infections. When you see the Pfizer logo like everywhere on their products, I mean, Zosyn is probably one of the biggest one that I see just about every day. And you know, they're a good company overall. And
yeah, they've always got a lot in the
like,
pipeline. And they, sorry, go ahead.
Sorry. So I was just telling Pfizer is like P&G or Nestle. It's like a household company. So it's not going to go anywhere. It's going to raise its dividends always. And yeah, that's the reason I started stocking up on Pfizer.
Well, they got Paxlovid too. Speaking of COVID, that's like an anti-specific
Viral,
COVID,
yeah.
even though, so it's effective. They also have a vaccine, but again, the big problems nowadays are diabetes, hypertension, asthma, COPD, and you know they have a wide variety of medications for people, anti-anxieties. I mean, I can just think of just some of their brands that they carry, but I mean, they're just so powerful, and I'm surprised with their price. But they distribute dividends. They hike their dividend, and I honestly, you know, I'm not giving financial advice, but with AbbVie, with that price, Pfizer should be.
Right.
Pfizer's a little bit more valuable than AbbVie. I know AbbVie has a few things, you know, but Pfizer has a lot of products that, you know, people like. I know AbbVie does this and that and this and that, and Humira, you know, the patent and all that, but Pfizer's pretty nice too.
Yeah, I mean, look how the other healthcare companies, the big ones, have all been doing really, really well. Yet Pfizer is lagging behind. Pfizer's at 52-week lows while everybody else is at highs. Like, that's got to catch up at some point, right? That's just the way the industry works when you've got a solid company like that.
But they've like always been stagnant. They don't grow a lot price per share. So, I mean, they're a very good dividend stock. People like, oh, Pfizer sucks as a company. No, they're just a very good dividend stock. Value investors love them, like myself. So
Yeah.
When you look at the price to earnings, I'm just looking right now. Pfizer's 7.3 and AbbVie's 34.
Right.
And isn't Pfizer and SCHD? I'm gonna just.
It is.
Yeah.
Yeah.
So I mean.
Yep. Big part.
Yeah.
So I mean,
What do you guys think of? You guys have been around for a little while. Of I hear healthcare stocks usually do well through recessions. Are there any thoughts on that?
They're always going to be strong. I mean, they're good defense stocks too. I mean, just looking at them again. I mean, some of maybe the healthcare REITs might be an issue, but healthcare stocks that carry pharmaceutical products and stuff, Johnson and Johnson, AbbVie, Pfizer, Becton Dixon. I mean, I'm just thinking of some of them.
Yeah,
They're going
Merck.
to be pretty strong.
Okay.
I just see them
Gilead
as strong.
also pretty
Yeah,
strong.
Gilead Sciences, that's another one.
Amgen, Merck.
Yeah, I mean,
Eli Lilly's been on a tear.
Yeah, they've got that new diabetes slash weight loss
What, the
drug, right?
Ozempic?
That's really
Yeah,
it's really hot.
It's like honestly, I'll be honest with you. I mean, they pumped that medication out in doctors' offices for weight loss. It does work, but honestly, people want the edge. It's like cheating on the SAT or ACT. All it comes down is the discipline if you want to lose weight and stuff. And if people actually were disciplined, they don't really need Ozempic, but people take Ozempic and all these other medications, to try to get the edge. And it's expensive. They're just marketing the crap out of it. I mean, it works. I mean, the research has shown it works, but it's like, is it really worth it to get a shot every week when all you have to do is just diet and exercise, just being straightforward.
Right.
Yeah.
So guys, I wanted to ask your opinion on, with the fixed income market, getting 6 months, 9-month duration, maybe 1 year. I'm not talking 20, 30-year bonds or anything, but, near term, you're getting anywhere from 5 to 5.25% in CDs, treasury bills. Do you think that's a real headwind against the market? Like, why would you invest in SCHD or some other Pfizer stock or some other good dividend stock, maybe paying 3 to 4% when you can get a safe, guaranteed return with zero risk at 5.25%?
it's
Do you want
tough.
me to take this?
Sorry, I have a lot of money in cash right now because it's making, it's making good returns for the first time in, a dozen years or more. I guess since 2007. So first time in 15 years that cash has had any value. But I have a lot in, and I'm collecting around 5%. And so so it is safe. But I'm slowly pulling money out and putting into the market as well. Because when the market's low, when the market when there's some declines and you get some deals over time, as the market rises, which it tends to do over time, your dividend yield on cost will be higher. So you buy stock now and it's up 4%. In 10 years from now, you're getting 8% on that cost. Whereas in the bank, it's not the same. Also, these rates you're getting now, unless you can, if you lock in for a long term, which I don't, I'm all on floating. These rates are not necessarily going to continue. So, whereas a stock dividend, in all likelihood, is going to continue. If it's around 4 or 5%, it'll be that rate going forward as well. Whereas I think these are probably some temporary levels for cash that you may not be able to get in a year from now or 6 months from now, or even if rates come off.
Yeah, I think the other, there's both sides, right? Whether you want to sleep at night and don't worry about the downturn and these dips, right? But on the other end, like you mentioned, you get the dividend raises by these companies over time, so your yield on cost goes up. The other benefit also is the tax benefit, right, that you get on a qualified dividend versus your interest income, which is taxed at ordinary income, and it's usually higher.
True.
Yeah.
Yeah, and then of course you've got the capital appreciation potential of a stock versus cash that's not going anywhere.
Yep, perfect.
Yeah,
Yep.
you get rewarded for that risk, right? You're taking a risk and you get rewarded, or you can be rewarded for it, right?
Yeah.
So I always say this things about bonds. The only bonds that you should like is James Bond. That's just my phrase. And like if you look at SCHD, recently their trends, there haven't been hikes, but over time, in theory, they're going to be hiking their dividend. and their price per share is going to go up, and your net asset value is going to go up. That's why I have SCHD in my IRA. And the thing with bonds are you going to enjoy a stagnant 12 cents when you can have money in realty income where you get 25 cents and then hopefully 26 cents, then hopefully 27 cents in the future, and maybe a potential stock split, because I'm pretty sure realty income has split their stock over time. And Vanguard's ETFs also have split their stocks in the past. SCHD, if it gets way up there, board of directors may make a call. Hey, we may have to split it. So there's another opportunity for ETFs to split their stock, to be attractive to shareholders. So that's a thing versus, bonds and stuff. Bonds are just stagnant. I like things that go slowly up. Now, don't get me wrong. I do buy covered call ETFs and I invest in ZIM. ZIM's kind of like you throw a dartboard, stuff at a dartboard, and maybe you hit the center, this quarter, or maybe you just hit a little off, or you're like somebody that has too much of your buddy in the shoulder with a dart. So, I'm kind of aggressive too with some of my investments.
Which is the right thing to be when you're young, right? You have less time to recover if things go sideways, and that's, they recommend, as people get older, they would have less risk and more safe cash flow.
True. So Stan, I was going to ask you a question.
Nice.
How many shares do you have of SCHD?
Well, I have a lot more than I had yesterday.
That's good.
I bought about 84 today. So I'm up to, what was the number? 1,178 now.
Oh, wow.
Wow.
Yeah.
Very nice.
And how much is that in 1,178? How much is that in dividend income?
So, well, I got to do some math. It's all new, so I haven't added it up yet. But it's got to be
look at it.
per year about $2,500 a year, I think. Actually, I got it here. You know what? 3,000. It's over 3,000 now.
That's good.
Yeah. And, and something I was going to say, we touched on it, but like the dividend growth, right? You were talking about it. It's been growing at 14%. That's not likely to continue. But say that got cut in half, 6%. Even at 6% in 12 years, that payout will double from doing nothing. So if it's paying any shares I buy today, you're getting a 3.8% yield. So double that in 12 years, right? We're looking at over 7. That's incredible. You're not getting that with a bond, a bond or cash in the bank, money market. It's great short term. That's fantastic. Great time to wait. I love that now you can wait for dips. You can get money on that cash while it's sitting there. But when there's a nice opportunity to buy, I still don't hesitate, to answer Masterpiece's question. I still think it's when you see that value in a stock, that's what you want.
Nice.
Are you doing any cover calls against your positions or no? Just
I
letting it
do,
ride?
yeah. I haven't been doing a lot now because it's been down so much, and I don't want to make any money. I've got to be a little more aggressive than I want to be. But I will. I've done them in the past. I usually do them, and I'll be doing a lot when the price starts coming up a little more.
How far away do you go from the current price?
Yeah, I go. I usually look at. I look at more the range. Like I get a feeling for the range it's in, and I really weigh it off of kind of the trend at the time. Like in the past, when I was doing it more, it was always 76, 77, 78 was a
Right.
safe spot to be. But now it's down a lot. I would do like a 74, 75. But I'll judge it more like there's only monthlies available too. So you got to be a little more careful because a lot can happen in a month. So I do give it a lot of leeway from where it's at. So right now we're trading it, under 70 right now. So I still wouldn't want to do anything under, 74. So you're
And
not getting a ton of premium right now for that.
Are you doing your entire position or just like in steps? Like
I do a
one or
little bit at a time. Yeah, I
little bit at a
don't. And this is like having this much is still fairly new to me. Like I can't even keep track with how much I've been buying lately. It's I've doubled my position in the last, since October. more than doubled. So having this many shares to play with on covered calls is really a new thing. Like I would only do, maybe 2 contracts in the most in the past. So, but now I can do, 10 if I wanted to, more than 10, 11 now if I wanted to. So yeah, that'll come, and I'll probably would do maybe half, depending on how I feel at the time, like how things are trending. But I'm going to be safe. I'm going to try to get maybe, 20 bucks, $25 per contract kind of thing per month. Nothing too aggressive, but that's nice.
Yeah, just extra income, right, on top of that dividend
Right.
income.
It
So
just
it's
adds,
very
yeah,
nice.
it just adds to that dividend, right? And if you're, and if you watch it as much as I do, it's not hard to kind of keep it out of the range where you're going to lose the shares.
And how often does it rebalance itself? Like bring in new
It
companies
does.
or kick out the old ones that are not performing?
Yeah, it does a full reconstitution every year, and then every quarter it just rebalances. But the rebalance is just like looking for individual stocks that are over the 4% limit and whole sectors that are over, I think it's 20% limit. So that
like,
would, yeah.
Yeah, sorry. I was gonna say, so with like the recent downturn in Paramount, right? Is it gonna wait until another year to take that out?
It would, yeah. But of course, as that stock price drops, it's naturally going to take up a smaller portion of the fund, right?
True.
And if it did cut the dividend completely, stocks that cut the dividend completely are reviewed monthly and taken out. But they did leave a little bit, so I think they'll still stick around.
Very disappointed in that move with Paramount and Ford. Why Ford? Why does SCHD have Ford in them? It just, why?
Yeah, I trust the process, right? I mean, it's gonna. One thing I like about it, it's not emotion. Like it's not decided by somebody like who's trying to pick trends. It's using filters that look for certain numbers, and if it passes the filter, it passes the filter. It's in. If it doesn't, it's out. And I like that because we're making emotional picks all the time. You can't help it. So I like having a big pillar of my portfolio where that's out of the picture. It's just cold hard facts. And if a bad stock brings down the price, then I get it for cheaper. And eventually, if that stock doesn't perform, it'll fall off the index and we'll be okay. So it all works out in the long run.
I agree with you.
And maybe it turns around too. Like maybe a Ford does end up turning around and it does well. So the way I see it is you only have upside really in the long run.
But I agree with you. Having, the people who are investing need to be able to look at this being, they're doing it via some sort of system, and then that gives you, it gives you comfort that this is what's going on. It's not just a simple, actively managed portfolio with guys just looking at stocks and choosing and picking that this is how this one works, and that's the nature of this ETF, and it's been very successful. It's attracted a gigantic amount of investors.
Exactly.
It's well balanced. It's very.
Yeah, I really believe in the process. Like it's, we should all have a process as good as they have, and then we can add to that. Like it's not your only holding. It's a great thing to make a nice pillar of your dividend growth portfolio. And then when you see other opportunities, pick and choose as you go, right? So, but it's in the long run, I really believe in what they're doing and how they do it.
So Stan, are you going to use the dividends from SCHD to buy other stocks, or are you just going to let it fly with SCHD?
Yeah, I usually reinvest back, but what I do it manually. So I always buy on what I see as the best opportunity. So if there was another stock, if I got my dividend from SCHD and then there was something else that was a better value, I would put it to that. But generally speaking, especially when the stock is down, I'm buying, it's all going into SCHD. And in fact, a lot of my other dividends, I do the same thing, and they're going into SCHD right now too. But if SCHD would to start to be higher valued, that would flip and it would go into something else. So that's the way I do it. I find the best value.
That's the beauty of M1 Finance. It's just like, all right, what am I buying? I don't know. I'll just throw money in here and we'll find out what I'm getting.
Right. Exactly. That is pretty cool. I don't like that you can't sell covered calls on there. There's some drawbacks, but there's a lot of great things there too. It's a great set it and forget it.
So speaking of covered calls, that options ETF TSLY is now on M1 Finance. And I've been experimenting with TSLY and these yield max ETFs. I mean, it's just play money just to throw in there. But the nice thing with these covered call ETFs, especially on M1 Finance with fractional shares, QYLD, RYLD, XYLD, DJIA, and a lot of the Global X covered call ETFs all distribute dividends on the same day. So one thing that I'm looking at with JEPI and some of those stock covered call ETFs and ETNs in the future is actually use their dividends to buy my dividend stocks. So I'm not at the point yet for my M1 Finance portfolio, but that's a nice thing too. You know, the dividends that you can use with the covered calls, you can use it to buy SCHD with a distribution percentage. So, I mean, like you're kind of stagnant, like from here to here, like you're not going to get a dividend increase. It's like in this line, 17 cents to 23 cents or 25 cents with QYLD. But it's nice when you have enough shares to actually buy the dividend growth stocks. So that's one thing I'm kind of looking at doing with these covered call ETFs and ZIM is the dividends from ZIM have been phenomenal to buy my dividend growth stocks. So it's just one experiment I've been messing around with. I don't know, Stan, have you thought about doing that?
Yeah, it's attractive. I think about it every once in a while, but I've run into things where something too good, just doesn't end up working out. It's too good to be true, and then it really hurts when something goes wrong and they slash that dividend, or you start seeing your capital just disappearing, or like say Zim all of a sudden just slash their dividend, which I think has got to happen at some point, and then the stock price just completely tanks because everybody was in it for the dividend. That worries me. I really don't know. I haven't done a lot of research on that one.
It's really unique. Like their revenue, they share it like with how many shares you have. So, like I said, it's like a dartboard effect sometimes. I mean, sometimes you'll get $6, sometimes you'll get $2 per share.
Right.
It's not something to completely rely on. It's not reliable like SCHD or some of these other ones. It's nice to put play money in, and see what happens. But I tell people, like, don't put all your eggs in the ZIM or QYLD.
The one that I take the biggest chance with right now, and I think is a great one, is JEPI. And other than that, I don't really get too involved with the really high yield stuff.
Yeah.
That's my biggest play with that. And that's gone well so far. And, I'm always kind of, I don't want to say worried. Like the more I learn about it, the better I feel. But I'm kind of, what is the word? Critical, I guess. Like just,
Let me just shine a little light on this topic. So I also got very excited about QYLD way back. And I decided, this is amazing. Like it's gonna give me very nice dividends. I think it was averaging around 9-10%, and I had over 2,500 shares. But I looked at the long-term graph of it since inception, and for the time that I was invested, it lost money, it lost value. So the only way you could keep up is if you kept reinvesting those dividends that it paid out. But that doesn't make sense, right? Like if you say you get 1,000 a month and your balance drops a little bit, or because of the market it goes down, but then you reinvest that dividend and then now you're back to your initial value. So did you really get that $1,000 dividend? Like, is that really earned? Or like when I did the analysis of it, it felt like to me like you withdrew, so you have $1,000 in the checking account, you withdrew 500 and you're like, yeah, I got 50% dividend, right? But then you put that $500 back and you go back to $1,000 balance again. Did you really get that 50% dividend? You didn't.
Yeah, I agree. I mean, it's stagnant. I call it the box theory. Like it's going to be $17 to $25. Let me see if this will work with my mic, but it's like this. The dividend is going to be 17 cents, 23 cents, or maybe 17 cents, 25 cents at best. Price per share, about $17 to $25. It's not going to get out of that box. And that's the thing about and plus you have an expense ratio. I mean, the thing with those it's all about income and for people that are trying to retire, but it does have a high expense ratio. And the only thing I see relevant with the covered call ETFs with QYLD, RYLD, and XYLD is to use that dividend income on M1 Finance to buy other dividend growth stocks. That's the only thing that I see like effective. But you have to have a lot of shares, to do that.
The one thing I like about Jeppy is that as opposed to the QYLD is they sell out of the money calls. So there's a little more room for some growth. So you can get some more upside. While the QYLD, it's right at the money. So if, and I think that one's on the NASDAQ too. So you're going on something that has a lot of growth potential, but it's really you're not going to be able to capture that because if there's a bull run, you're just going to keep losing the shares. So I don't love that one in particular, but Jeppy, Jeppy can give you a little bit of both. Like you're not going to get the growth of the S&P, but you can get a little, and then you get a great, like the yield is like right now, like 12%.
Yeah,
but at the same time, they're not saying the goal is only like 5 or 7. So that could come down big time if the market is not volatile, I guess, right? Volatility helps with those.
Right.
I'm going to jump in here, guys. I'm going to jump in and welcome Dividend Dog to the party. Thanks for coming, Dividend Dog.
What's going on, guys? What's going on, you guys?
I'd love to hear about
Happy birthday,
the
Dave.
Chicago conference. I saw the pictures of you and all the boys there.
Yeah.
It looked like an incredible time. So, yeah, tell us a little bit about that.
Yeah, it is like you said. It was a great time in Chicago. The weather was great as well. Just to put some faces to names that we're constantly saying on our phones. Feels like we're like living in our own like digital world. But it was great just to get out and collaborate. Learn a couple new things and seeing what other investors are doing in their portfolio and hearing their backstory on it. And yeah, it's just a great energy and motivating as well, just because it's nice to see, like I said, put faces to names, just to basically meet everyone. I was excited to do that and go to the Cub game. Went to the Cubs game right after, and just had dinner with the guys too. So it was a good time. Definitely looking to do it again too at some point in time next year or a year after. So we'll see. Just hoping to get more speakers like you guys, and just to motivate each and other investors out there to continue to do what we do. So yeah.
What was the conference?
It was just a dividend, like just guys on Twitter. We got together, put together just a conference of different speakers. Brad Thomas was there. He's really dove in deep on some real estate. He really loves realty income. It's his biggest holding. That's we really took a dive in there. Almost made me buy it. But I like Victor North. But that's just a side story. But yeah, that's all it was. We had, like I said, different presenters. Dave, he really really put on the conference and did a great job on having food and everything there for us. So we're looking to do it again, and we're going to try to get more and more people to come out, and so we can actually meet each other in person. Just to feel this great energy, because it's definitely special.
So the one picture I saw, it was yourself and, like you said, Brad Thomas, Dave Greta, Nick, who is Twitter handle is at Smart Net Worth, I believe, or Smart Net Worth 1.
Yep.
And there was it was the fifth person in that photo. Sandstone Davey, I believe.
Sandstone.
Yeah, Sandstone Dave, and then the guy in the Lions shirt. That's one of my best friends from home. I grew up with him since we were like 12 years old. I got him into doing long-term investing last year. He's investing, like he just told me that today he's invested $1,200 last month, just from just in all the ETFs that we're talking about, and I'm passing that information along to him. So he drove over from Michigan, about 4.5 hour drive, and stayed there with me for the weekend, and it was just really good support from from a friend, but also awesome to get him engaged with us as well, because he's really interested in building that generational wealth and financial freedom.
No, I looked at that picture of the 5 of you guys, and I'm like, oh, I've got 4 out of 5 on my bingo card of previous guests on the Passive Income Podcast. So who I DM'd right away was Brad Thomas. I'm like, you got to be on the Passive Income Podcast, and so we're working that out too. He's gonna come on sometime eventually, and I'll complete the bingo card of that picture.
Yeah, Brad's awesome to talk with. He has a lot of information and a lot of experience too, just outside of the market and in the market too. So, just being able to pick his brain, just ask him random questions, just about anything, was good to experience.
Yeah, it sounds like a great time. It sounds like a great idea too, like getting the people in the community together. And I honestly, I'm just kind of spitballing and thinking this, like, yeah, you guys should do one in wherever in the U.S. each year, whether it's Chicago or Miami or Los Angeles, whatever. And then we should, like, I think we've got about 4 Canadians on here right now. And
Yeah.
so I'm thinking we should probably do one each year in, well, Boomer, I'm going to say Vancouver. I just need an excuse to go to Vancouver.
Good Vancouver. I'll buy you a beer.
Nice,
I'll go to
yeah.
both. I'll go to the Canadian and the American one.
Nice.
Yes, me too.
Yeah, I'll be done with
I'm down
NP
for that.
school, so just let me know.
Yes, we would love to have all of you guys, because like I said, I felt the energy. I'm even more motivated now, so I couldn't imagine just being around the rest of you guys and being and then coming back to, like I said, continue to hit the market every day.
Nice.
So what
Yeah,
was the
no,
average
sounds
age of the guys who went to that thing?
That you say the average age? I would probably say mid-40s.
Okay,
Really?
it's funny because on Twitter, other than the odd person, I'm like way older than everybody that's on there. I mean, there's a couple of us on right now who are over 50, but there's so many guys that are doing this that are
as of today.
20. Yeah. You're way over 20. You're like 20 in like 4 hours, 50 in like 4.5 hours, and whatever, almost 50 in one full day. But it's the guys that talk about all their purchases and all that kind of stuff, they're all like 20 and 30 years old. And like Dave, you asked me once to be on your podcast, and I said no, because it's this is I have other Twitter accounts, but this one is anonymous, because I never talked about, like, I don't talk about this with any of my friends. All my friends are successful. All the kids I grew up with are all lawyers and doctors, and they're all rich. They're all millionaires, I would say, of almost everybody I know. But I've never talked with any of them about what stocks they own, or what they paid for their house, or how much money they have in the bank, or any of that kind of stuff. It just seems so weird. Like, it seems odd.
And I can tell you, they are some of the worst investors, the doctors. Like,
the doctors,
funny.
a lot of the doctors are terrible.
Yeah, I mean, I literally have a conversation with one that lives in my complex. He's a cardiologist, and I'm like, he's like into dividend investing. I'm like, here, just go to my channel. I'll send you texts of what I'm buying and stuff. And he's like, oh, like, well, what about this one? I go, no, no, NLY.
Oh man,
that is not uncommon. No, it's the joke. It's the joke about doctors, is that they're terrible investors. They make tons of money, and so they always have a lot of income coming in to make the next investment, but they're not. It's not something they focus on typically. But it is weird. It's just something, like, I don't talk to my friends about this at all, and it's not something I know where they live. I know their houses, and I've known them their whole lives, so I know they got lots of money. But it's not something, the way all these young guys, I mean, they're posting, I bought this many shares this day, my portfolio is worth X. And it seems like it's a different dynamic now, maybe.
I think it's becoming less of a taboo to talk about money, whereas, like, our generation, and I know a couple of you guys are a little bit older than me, but growing up, money was more or less a taboo subject. You didn't talk about it. You didn't ask somebody how much they made. You didn't ask how much your house costs, or any of those questions. And now it's a little bit more open to say. And again, you see these, like you said, these young adults, in their late teens and 20s, and posting on Twitter that I just bought 10 shares of company XYZ. And your first thinking is, how is a 20-year-old and affording that many shares of that company? But good for them that they're doing it, right?
Yeah, it's great.
Yeah. I really do think with our group of DivTwit, it's more stable, and I think we're really helping the reputation of FinTwit.
Oh,
because they're going through a lot of problems. Web3 is going through a lot of problems, and the FinTwit spaces. I'm like, oh my gosh, I got to leave right now. And every time I was on a DivTwit like space, everything was like good. Everything was cool and just chill and smooth and stuff. So that's the nice thing about DivTwit versus some of this drama that's going on. Everybody's just like chill.
Yeah, I couldn't agree more with that, right? Like, because the DivTwit community, all we do is sit back and wait for the dividend to roll in. That's all we do. Nothing more, right? Like,
That's pretty easy.
more.
It should be easy.
It's very straightforward. You just put money in and reinvest. That's very straightforward. That's all people have to do.
If you put it into normal companies that have been around for a while, the odd ones are going to be like 3M and become shitty over time, but 95% of them are going to do fine, and they'll slowly grow over time, and you'll end up with a bunch more money in the future.
Yeah, I agree.
And speaking of one of these young guns, he couldn't make it to the last live stream with the young guns, but investment, it's Kage, because it's an anime. Is that?
What's up?
Nice, yeah. So, one of the young guns, if I recall correctly, you're in Colorado, and we were just talking we were actually literally just talking about how, us older generation, the topic of money was very much a taboo subject. We just didn't talk about it with our peers or our families or anyone's, and now people are a lot more open to discussing, how much they make or how much they paid for their house or anything more related to finance. I guess from the younger generation perspective, what are your thoughts on that?
A lot of it is still kind of closed. If that makes sense. Sorry, I'm on my phone. Is
That's
my
okay.
audio?
That's all good.
Is the audio okay though?
Yeah,
it's great.
Yeah.
All right, cool. So it's still relatively closed. It's more open. I found a lot of times, like, if you just ask point blank, they'll be like, screw you, I don't care. But if, like, you ease into it, you talk about, like, your finances or whatever, and then, like, you get more comfortable with them, and then they'll tell you. But, I mean, this is like coworkers. Like, if you're talking to coworkers and stuff, I think it's really important for coworkers to talk about how much you make because, well, if you're doing the same job, you should be getting paid around the same. If you're doing the same amount of work now, sometimes you might have a coworker or whatever that makes more than you. But the reason they make more than you is because they provide more value or they work harder or what,
Or they've been there 20 years and you've been there for one, right?
Exactly. So
yeah.
some people, well, I do the same work as it's like, well, they have tenure on you and they're way more efficient or whatever, you know what I mean? But I think it's good to cut down the workforce and kind of like Twitter and like since money is talked about all the time, you just it's an important thing to talk about. And like it's just becoming less taboo.
Nice.
I mean, with my friends, none of them, they ask me, they want to learn on advice, and I don't even waste my time because they don't come back to me, or I don't even talk about it at work. I try to keep it on the DL with my like real life and my YouTube channel. People are like, what is it? I'm like, don't worry about it. It's separate. I keep it on the DL and stuff. So that's just me. I don't even waste my time with it. I just like keeping it separate. But somebody did find me that I work with, and she was a nurse practitioner, retired one. She was actually a dividend investor. She called me by my name. She pulled me aside when she was about to retire. She's like, yeah, it was great working with you, Darth Dividend. I looked at her and go, how do you know that? She goes, I watch your videos. I go, oh, okay. That was like, oh, it was kind of funny.
Like, I didn't know you knew how to use the internet.
But
Nice.
I don't know. It's hard to appeal to people because people want the instant gratification, and that's the problem is, people, we're Dividend Dog. We were just talking about like Ozempic and weight loss, like people with discipline, working out and stuff, that's all it takes, but people want to take the magic medication to suppress their appetite and pay all that money, you know, it comes down to really just buying, holding, reinvesting, and that's it. It's just that's that simple.
Super simple. I completely
And
agree
I
with
can
you.
100%
You know,
agree
a lot of
with the
people have the
working
same
out.
thing with like my portfolio. I mean, I have a really low yield, so some people are like they don't like that.
Oh yeah, I think he froze.
Froze.
Definitely lost him. We'll see if he comes
I mean,
back.
I do a combination of high yield, you know, high dividend growth. I like a hybrid type stocks, and I invest in a lot of hybrid type things. My portfolio is pretty diverse.
The yield leads, yeah, low yield, high growth for a guy, young guy like him is probably a really great idea. Right?
Yeah.
He's got years. What is he, 20? He's early 20s?
Yeah, I'd have to go back and watch the episode
Yeah.
he was on. He's been a guest as well on the Passive Income
23.
podcast. Yeah, if I recall correctly, 23-ish. I could be off by a year or two either way, but yeah, he's definitely one of the young guns, right?
Yeah.
Yeah, he's got time.
Yeah, I wasn't doing this at 23. I can tell you that.
I started doing it at 33. I'm 37 right now, almost 38 in August. So, you know, everybody has time. And how you allocate your resources, that's the most important. Because, I mean, I see friends that go out to bars and spend like $100 a night every weekend. It's like,
My Snapchat reel on Friday, I can just guarantee every time I can just go watch and see where every bar everyone's at doing this. They're boomerangs every Friday, Saturday.
Yeah. Go out to the expensive dinners. It's like, and that place isn't even good. They just go because of the name. It's like, okay, so you're gonna throw 200 down every weekend. Like, it's not that's a turnoff to me. I mean, of the opposite gender, you know, I'm gonna try to pursue that, you know. So I mean, it's a different lifestyle that we have compared to people, and it's funny because some people hate it, but I don't care. I mean, I'm doing my thing. I mean, you guys are doing your thing.
Yep.
Yeah.
But eventually you'll get old enough and have collected enough, you can do both. Right. So like I go out and we go out whenever we want, get wherever we want and travel wherever we want. But you know, it's whatever. I'm 30 years older than you guys, and you'll all be doing the same thing when you're my age. And that's the goal. You know, you're responsible and investing in your future. But I say this on Twitter. You're not just trying to die. You're not trying to be the richest dead guy. You do have to, you want to have your experiences and enjoy your life as you go along too. Like I'm not just doing this so my kids have lots of money.
Yeah, that's a great
true.
point. Hey, Kage, we were just when you were froze there and reconnecting, we were he's gone again.
He's shy. He's shy.
Well, it looks like Shalini had to bounce as well, but I see Steve, and I wanted to circle back to somebody was mentioning there several minutes ago about healthcare REITs. So this is specifically to Boomer and Stodgy and Steve, the Canadians in the crowd. Northwest Healthcare. That's
fuck
a
them.
healthcare REIT we have here in Canada. What's going on with that one? Why that reaction, Steve? You go first.
Oh no, my reaction is what Boomer said.
I didn't hear what he said.
It's not worth
I said fuck them.
Oh.
No, that's what my reaction was too. I don't know anything about it. You mentioned it. It's the first time I've heard about it. I don't know anything on it, to be honest. So I can't contribute to that.
Okay, well then we'll circle back around to Boomer.
I've got I think 4,000 shares of that, but so it's whatever. It's a holding, but it's ultimately it's a real estate holding, and in the healthcare industry, you think it would be good, but they're being impacted by interest rates like everybody else, and in real estate, which was my business that we do for a living. And so interest rates have affected them negatively, but it's not like their stock's collapsing, but it's struggling. And I think they have a good model. They have a good base of properties. They have a good base of clients, but they have a lot of interest expense, and that's hurting them. And so they're being punished by the market for that.
How big are they, like size wise? Like how many, buildings are they a landlord to? That's always a big question that I have for people that own REITs or like certain amount of REITs.
Yeah, what's their market cap if you have that handy as
The
well?
market cap is 1.9 billion, which is
It's pretty
significant
nice.
market cap for a Canadian company.
For a Canadian REIT,
I mean, the
right?
one.
Say again?
Darth, go ahead. I think you were about to say
No,
something.
you go ahead. Like something, and I was like, "Ooh, I gotta tune in." No, what were you saying about something?
No, just when Boomer said 1 point whatever billion for a market cap for a Canadian company, and I said, yeah, well, specifically for a Canadian REIT as well, right?
Yeah.
Yeah, it's
But,
going to be
yeah, no.
interesting. It's
Sorry,
going
go
to
ahead.
be interesting with the healthcare REITs. I mean, I own Omega Health Investors and MPW. Like I said, I like to diversify with my REITs and my high yielders and dividend growth ones. But MPW, it's going to be very interesting. They are big. Same with Omega Healthcare Investors. That's the one thing that have them go per shares down. And what was that? I forget, Voyager or whatever that. I forget what company that was. MPW is taking them to court, so they were trying to short sell them. So they're going after them in court. And I'm wondering if Arbor will go after Ninja as well. And I'm actually posting a video about Arbor's, earnings and stuff and why I bought more today. But it's going to be very interesting with these short seller and these short selling companies.
Yeah, because one part of it is they don't just short sell; they short sell and then get as much press as possible about it to help collapse the price. And so,
yeah,
a lot of their short selling strategy, I believe, is the press, as opposed to just that they're short selling it because of the fundamentals. I mean, they are, I assume. I've done a bunch of short selling. One of my brokers, that's one thing he does. He has a short selling formula, and when things come up on his that meet the criteria of his program that him and his brother developed, he'll call me. But they're small. They're not then putting out a press release about it that helps the process.
Wouldn't that be like illegal? That sounds really illegal.
It seems like it to me.
It seems like violating the laws.
So, Dividend Dog, I was going to ask
Hey,
you a
Stuart,
question.
if you're still there.
Oh, I was going to ask you, you're a Georgia Bulldogs football fan since you're a big. Saw you wearing an Atlanta hat.
Not Georgia Bull. I mean, I like watching them more. I'm more Michigan
Mhm.
State.
Michigan State. Okay.
Yeah.
I was going to give an analogy of Zim. I mean, I like Zim stock, but sometimes I like Ohio State's kicker. They don't produce quarters.
Ooh.
Yeah.
Come on, man. You know I got a strategy. You know I'm not really loving it. I'm just using it right now so I can build up my other play.
I know. I had to give a joke when that.
Oh,
guy
no, you're good. You're good.
He was like a wet noodle when he missed that. He froze him so bad.
No, I listen. I got in way too early on that one. I mean, I was in at $40, and what is it, $17 now? So yeah.
Oh, I'm still buying it. I mean, I still have it. It's nice for, some, it's like a dartboard effect and stuff. Sometimes you hit the bullseye. There's. I'm still gonna hold on to it.
I actually saw a container going on the highway yesterday when I was driving home from work. I'm always on the lookout for stocks in the wild. I saw a Zim container being carried. That was my first time ever seeing it. I was like, look at that. There it is. That's a good sign. Woo!
Well, it's like CubeSmart. I mean, I saw the CubeSmart starting to go crazy. I'm like, I'm going to search these guys. I go, ooh, they're a REIT. I'm buying them. Lo and behold, I mean, that's what happens. And that's how I bought Conagra Brands. And, Money by Ramey, like, buys them. And I saw these. I was just buying, like, frozen veggies for meal prepping and stuff. And I saw Conagra Brands. I go, oh, Matt, he owns that. I'm going to do more digging. So I'm like, good one, So look at logos at the store. That's another thing. That's the easiest advice I can give you.
Yes. logos at the store are definitely key indicators. Have you quick question? Have you guys ever heard of a small REIT or storage REIT called Self? Ticker SELF.
Self storage. I think I've seen it on the highway. SELF.
I've never heard of that. Global self storage? No.
No.
I don't.
I see it on Morningstar. Like they're rating it pretty good, and then I see it on as like a small cap self storage REIT, because that industry is expecting to grow here the next 5 to 10 years. Just getting exposure, like if anyone's buying like EXR, Q, PSA, that'll give us some exposure to like a smaller cap in the self storage.
I'm actually looking up right now.
Look at their chart right now. So their stock price is the same price as it was in 1999.
So that's
for 24 years. Their stock price has been flat, and it hasn't gone up or down. So it's basically you just get taken it for dividend yield then.
I mean, the revenue has gone up. I'm just looking at each year annually.
But how many shares has there been out over those years? How many units?
So trading sideways for 24 years with.
Yeah, they seem to have a lot of like debt, and they keep like reissuing their debt, like continuing it and like renewing. And this interest rate environment is not good for that right now. So I'm just looking at their
facts, okay,
at their notes.
Ugh, their dividend growth sucks. I'm just looking at their dividend. I mean, 2016 it was what, 6 cents, and 2023 it's 7 cents. Ugh. Maybe in the long run. I mean, but I mean, if you have payment,
I just saw it in an article and I clicked on it. I'm like, what is this $5 small REIT here? I'm like, is this a sleeper here? So never mind.
I'd still look at it.
It's not getting in my portfolio now.
I mean, I'd still look at it. You never know. I mean, self-storage REITs, like you were saying, like I have, like I was saying with Cube, I mean, that's a good one. If it starts acquiring more places, and as you guys know, 90% of what they make have to go back to investors. That's the definition of a REIT. So, I mean, that's why I'm heavy in REITs. And I was just telling people, Dividend Dog, on here that I'm going heavy in the financial sector and real estate sector for probably a while.
Ooh.
The price per share is down. Who do I got? Too many. See, I just got up to 400 shares in Key Corp, so that was a big accomplishment. Huntington Bank shares, I'll probably get to 400 maybe by the end of the year. I have USB. I have Ally. I've been loading up on. Let's see, what else do I got? I got a lot. Which other ones I'm looking at? Bank of America. I'm looking at right now.
Actually, Warren Buffett just upped his shares in Bank of America today, didn't he?
Buffett did, but he also got a deal to like have it's like a 6% dividend on Bank of America. So he also he has.
What does he get deals like that?
He gets Bank of America for like 50% off. Basically, it's stupidly cheap. Like the only reason he's buying Bank of America is because of his little deals that he worked with them, because he got debt through Bank of America and like loan to him. He was like, here's a loan. And now they're like, hey, your stock is at this price. We're going to take all those shares at like 14 a share or whatever it is. And so if you look at those SEE filings, you have to actually see what their cost basis is and like what they're buying them for, like how the stocks were issued. Because Warren Buffett, like his annual shareholder meeting, he's like, oh yeah, I would buy Bank of America at the stock price. But
I wish I was your age and I knew all this stuff, to be honest.
Same here. He's really good at the K10s too.
Yeah.
We were really, when you were offline there for a second. You were having some connection issues. We were trying to determine your age. How old are you? You're about 23, 24?
I'm 25.
22?
Nice.
Just turned 25.
Oh, we said 23.
Yeah.
And I'm going to also jump in here again and welcome Stock Pick and Bartender. Are you there? Are you there? No, I thought you
think
were
he's-
there.
I think he's drinking White Claws right now. That's why he's not being present right now.
White Claw, that's a good Vancouver-based beverage company.
Thing about Warren Buffett, if you look at his Chevron stock, he gets like an 8.7% yield or something like that, compared to like everybody else's like 4% yield. Just because like when you get a ton of money, you can just negotiate what dividend yield you want.
Yeah.
Wow.
They preferred shares.
Yeah, he gets preferred shares, but like he gets like special preferred shares that he can negotiate. And that's what he's doing with Bank of America. I don't know for sure, but I think that's the only reason why it got added, because he gave Bank of America a loan basically and was like, okay, I want to issue these bonds now and turn them into stock. At least that's my.
Yeah, so they're like shares that are more like a bond, like buying into debt, and then they can convert it to a stock at a future date.
Yeah, you buy convertible debentures.
Mm-hmm.
Yeah, you can do it like that's a better way to do it. I don't know a whole lot about it. I was just reading about it and I was like, oh, that's why he has some of these positions, because like some people are trying to like copy his portfolio and add them, when it's like you can't copy his strategy perfectly because he just has special privileges. I mean, that's what happens when you have a lot of money. I mean,
well, there's stuff he can't do too. He can't buy little companies
yeah,
like
exactly.
we can't. So.
He can't buy a lot of little.
Right. I found it very ironic when he bought Activision Blizzard, and then like was it months later, Microsoft tried to acquire them, and like the government said no. I was like, that's a little fishy. You know, what's going on here? I thought that was a little like, how does he know that? You know? So
Yeah.
I thought that was very.
I've been reading a lot about it.
Yeah.
With Bill Gates, his best friend.
It was, yeah, he actually bought it when he met Bill Gates. He bought 100 shares of Microsoft, but he bought it through his own personal portfolio, and this was long time ago. And there's been so many stock splits, but yeah, he bought a lot, so that's kind of interesting. I'm trying to find what I'm looking for.
What Darth, you'd mentioned you were talking about the financials. Do you have any thoughts on Truist Bank? That's one I just took a swing at recently.
I'd have to look at it.
It's well, I'll tell you, it's one of the largest, if not the largest, regional bank, and they do a lot of insurance as well as banking. So it really doesn't fall into the same category of these regional banks that are at risk. And then it's come down so much; its yield is now over 7%, and you know it's a risk because this whole regional bank thing is risky. But I had a banking ETF that was down big time. So I said, you know what? Let me sell this for a tax loss and throw it into Truist. And at least while I'm waiting, I can get a much better yield. And if it bounces back, it'll bounce back faster than the whole ETF would. And, you know, and it might work out. It might not, but I was already down so much. I'm like, let's go for it. Let's take a risk here and see what happens.
Yeah, I'm looking at it right now.
Yeah, check it out. It's really interesting. I've heard a few smart people, smarter than me, talk about it, and I've done some research too, and it looks good. There's definitely risk though. Don't just jump in because we're talking about it here, but
yeah,
have a look.
Making lots of money. When you look at its earnings per share, still making lots of money. Its PE ratio, like I'm just looking at the standard things without going into its own financial statements, but you know its numbers. Yeah, they look appealing, right?
Yeah, they're solid. They've been solid, right? The only risk is if something happens that this industry completely changes or they're the next to go down. But for me, they're one of the least likely of these guys to go down because they're one of the biggest and because they're very diversified. And they only lost. So when everybody else was losing, or a lot of people were losing a lot of depositors or deposit money in general, theirs went down like 1%, where, you know, some of the other banks were losing like 70%, 60%. So they've done well.
Yeah, I mean, sometimes with these, they're pretty big. Yeah, I always like when I buy regional banks and stuff like Key Corp or Huntington Bank shares, bigger the better. I mean, let's see, areas served: North Carolina, South Carolina, Virginia, Maryland, West Virginia, Kentucky, Tennessee, Georgia, Florida, Alabama, Indiana, Texas, New Jersey, Ohio, Pennsylvania, and DC. So the bigger the better.
Yeah, they have a lot here in Florida. They bought they're a merger between BB&T and SunTrust, I
Yep.
think it was.
Yep, I'm looking at them
Yeah.
right now. with their
Yep,
history.
Truist. They got a park down here with the Braves. Truist Park.
Yeah, they advertise a lot.
Big.
There's a lot. I live in Florida. There's a
Big.
lot of exposure here.
Yeah, if you're named, like if your name's with a stadium, that's pretty big too. Like, you know, I mean that's a statement right there that you're a big dog.
A lot of the
Yeah.
10K so intimidating. Holy hell, they're like 200 pages long.
What was that? Sorry.
Oh, I'm looking at like the bank's 10K. They're all like all the ones that you've listed off there. It would take me probably hours to go through them all.
Yeah, banks are confusing, man. Banks can be tough.
Like I read Ally's Bank's 10K before I bought them, just because they're trading under book. Like they're one of the only companies that I found that's trading under book value, that profitable even without auto loans. Like you can exclude their auto loans completely and they're still profitable. And that took me like 6 hours to go through. But I'm trying to,
Yeah, and that's another thing I noticed of Truist. They're trading at like 0.7 book value, right? So it's like, whoa.
The banking industry usually trades pretty close to book value. It's not like the tech and other industries, because book value with some companies isn't really relevant anymore.
Right, right.
Just because of branding power. Like Apple's book value is, I don't remember how much it is, but it's way less than 100. But they have some branding power, and that's why the intrinsic value is more important there. But if you can find a big company like that trades under book value, that's how I swing trade actually, is I only swing trade companies that are under book value that are profitable.
Interesting.
I'm maybe going to buy them tomorrow. I just I looked at it like,
dude, it looks good. It's the only risk to me is this whole regional bank. Like, just if everything changes, they come down with some new regulations that they can't make the money they used to. But otherwise,
I like,
or that they fail, but they don't look like they're going to fail.
The bigger, the better. I'm just telling you, if you have like a bank stock that's only like in one state, you know, you got to be careful. But and the thing, what was that one, Silicon Valley? They were mostly in VCs that like sucked, you know. And if you're well diversified and you have subsidiaries and stuff as a regional bank, you should be in good shape. I mean, I like Regions Financial too. RF stock, Key Corp, Huntington Bank shares.
Yeah, those are some of the bigger ones.
Yeah.
But you have to look at, like, Silicon Valley did not collapse because of the nature of its clientele. They collapsed because of they were holding a shitload of money from the funds that were raised by all those companies that had done IPOs. They're holding that money and they had to do something with it, and they put it into government bonds, which were yielding way less than they end up having to pay out in interest. And that's where their losses came from. Their clients were fine, and that's what, like, the banking sector in the U.S. And Dave will agree, the banking sector in the U.S. is so bizarre to Canadians. We have 5. I've never even seen National Bank, but I guess we have 6 banks, but we have 5 banks, and they're in every block on every city in the country, and they're all 150 or 200 years old. They've been paying dividends for 150 years, and every Canadian investor has a huge amount of Canadian bank stocks. It's just standard. We don't have all the companies you guys have. We don't have Coke and Pepsi and all these different kind of companies to invest in. So it's a big thing, and it's so safe. Like the bank industry is so safe.
Yeah,
and so
I agree. And I agree with like what you said with Silicon Valley too. But it's like, you know, some of the stuff, like say like if you're at KeyBank or somebody and you get a loan for a car, you know, you're usually going to get money off of interest and stuff, you know. And a nice thing is with credit cards too, anytime you swipe a card, they make money. There's a fee. So that's the other thing with the regional bank. Sorry about interrupting, but yeah, with Silicon Valley, I don't know. It's just it was a weird. It was weird.
I can
just
talk
everything in general.
So basically, the U.S. promised banks that they weren't going to raise rates as fast as they were.
Yeah.
And so they're like, oh yeah, we'll keep the rates for like 5 years. I'm kind of simplifying it. All of a sudden, Jerome Powell started raising them like super fast. I didn't see it
faster than ever
about the banking sector. I had no idea about this, and I was like, oh, so you kind of just said, you know what? screw you. We don't care about you. That's pretty much what the U.S. government said to banks.
Yeah.
Yeah, I'm an undercover Canadian. I'm actually Canadian too, so I get to I have investments in both sides. I live in Florida now, but
you
I'm
grew
Canadian,
up in Canada?
Yeah, I did. Yeah.
Whereabouts?
In the Toronto area. Yeah. Well, Northern Ontario initially. I'm from Sault Ste. Marie.
Oh,
but,
Sue.
Yeah, but spend most of my time in GTA, Toronto area.
It's hard to tell because all the Canadians kind of sound the same, unless you're from Newfoundland. But as
Yeah.
opposed to the States, there's so many regional accents.
That's right. Yeah.
And what took you down to Florida?
My wife's work, actually. She got promoted down here. Same company. They paid for the move, and why not? Florida. South Florida, too. It's like, man, it's tropical here all the time. It's beautiful, man.
Is she Canadian as well?
Yeah. Yeah.
Hey, nice.
Yeah. Where are you, Boomer? Where are you?
Vancouver.
Vancouver. Okay. Yeah, I heard that earlier. Okay. Do you do any ETF investing in Canada?
Yeah, I have some ETFs. Most of my ETFs are actually S&P 500 ETFs to give me U.S. exposure.
Right. I'm looking at the VDY right now in Canada. It's like have you heard of it? It's a high yield, decent growth, all Canadian companies. VDY.
VDY. Yes, I've heard of VDY.
Yeah, it's solid. It holds all the big high yielding Canadian companies. The solid, the banks, Bell and.
I have a different high. I'll look up. I have a high yield one. Let me just see what it's called. A Canadian high yield one. It is called.
Sorry to bore you, American guys.
They're U.S. high yield ones. I think I might have a Canadian high yield one, but like BMO has some high yield ones.
Yeah.
There's a number of them. Yeah.
Yeah. It's run by Vanguard, so it's low cost. It's got all the big boys in there. It's performed really well. It's got good dividend growth, and it pays like over 4% now. So looks pretty good.
Yeah.
Nice. And Boomer, I just looked a little bit more into what you said. I'm like, ooh, that doesn't look good. With Silicon Valley, I'm like, ooh, I see where you're going. Just looking into what they did, and ouch.
Yeah, they just had too much money locked up in low interest rates, and they were just screwed when the rates got raised.
Yeah, because they had.
Yeah.
Yeah, they were locked in. Exactly, they were locked in, and then as they had to start paying out interest, it killed them. But all the big Canadian banks all have giant unfunded liabilities for the same thing. All banks do right now. All banks have.
But the ratios were just completely out of whack with them. Like they were 90% locked up, where other banks is it could be under 40%. I don't know the ratio, but they were way over. And same with the other couple that went under were the similar situation, right? The ones with the highest lockup are the ones who got hit the hardest, and they're no more.
Yeah.
Do any of you guys invest like outside of US and Canada? Like if you look at Japan's interest rates, for example, they're at like 2%. Like
for 30 years.
Yeah.
I mean, that's why, like, if you look at, I look at Charlie Munger's and Warren Buffett's portfolio.
We lost our host.
Oh,
no.
Woo! Party!
Nice
No
birthday.
bar.
They'll just shit talk him until he comes back.
Like,
oh, he said BRB.
Market, ETFs.
Okay.
You looking at Japan still?
Well, I look at a little bit of Japan just because their interest rates are so stupidly low. But, like, I don't have enough money where I could actually take advantage of that interest rate.
Japan has.
They haven't. Their market hasn't moved for the last 30 years or something, right?
30 or 40 years, like
Yeah.
They have some decent pharmaceutical companies, but
it's just the world market's confusing because, like, their capital and their GDP can like grow a lot, but sometimes their just returns, like India's returns, have just not been great, even at explosive like 10-15% growth every year.
That's why I like VTI. Just they have the Vanguard Total World one. I just like the Vanguard Total Stock Market.
And VT is the world, right?
VT is the world.
Yeah.
Yep. VTI is just total.
Yeah. VT is the world, right?
Yeah.
Mm-hmm.
I've thought about that one, but there's a lot of countries that I really just don't care about.
Yeah, I know.
Those will hold down the freaking ETF too.
Yeah,
And
the
that
nature of the ETF though, like it will probably end up being all right.
yeah,
Those
because it's
guys
still
will drop off.
the biggest. So I mean, actually, it doesn't look too bad. Like the 5-year performance is like 22% for VT. It's because there's a lot of countries that just don't do anything.
That's
Yeah.
true.
I always
mean-
throw a little money into some ETFs for some other areas. Like I have one in India, the EPI, and it has some nice, like it reminds me of SEHD because it has some filters that look for value. And I really like something that screens. Like, let's screen out the companies that aren't making money. Let's screen out the companies that have too much debt. You know, look for high cash flow. I can't remember the specific ones they use, but they use fundamental screens. So I like that. I look for things like that. And then SCHY does that for the world as well. So it uses the same screens that SCHD does, but international.
Nice.
So that's a nice one.
Nice.
So like, let's say you use the Vanguard index fund because this is what's kind of making me not want to do the world. Do you pay different tax? Like, because like if you're getting like if you're getting dividends, they're gonna withhold a certain amount of tax. Do they do that for you through the ETF or?
Yeah, they handle most of the the intricate stuff. And then what tends to happen with a lot of it is you might get taxed on the initial dividend, and then a lot of times you can claim it back at tax time, and then you pay your country's tax on it for the most part. Yeah, it all works out. Like it's not with ETFs, you're usually pretty good.
Yeah, that's why like when I did I bought Nintendo stock a while ago because I just wanted how it would work, and it was just an experiment. Like I didn't care if I lost money, and it took me like 40 minutes just to do that line of taxes because and I had to keep looking up things, and I was like,
too much hassle.
And can just have the money.
Yeah.
Speaking of Nintendo, right here, got a little Super Mario.
There you go. We're going to Nintendo Land in Osaka this summer, so
Nice.
Wow.
Got to live the frugal lifestyle. This is like $7. I got it at Walmart. Perfect workout shirt.
Those are the best shirts at Walmart, man. Love those.
Yeah, and one shorts now that are cheap too.
They have.
And wait, they're back with and1 stuff.
I think so.
What?
Yeah.
Man, I'm in need of some gym shorts. You'll grab some and1 shorts to run it back.
That was a good documentary. I can't remember where I watched this, on Netflix or something. The N1 documentary. It was good.
I watched that. So good.
Yeah.
So much that was going on behind the scenes when I was watching it that I had no idea that was going on.
Yeah, that's really
so
cool.
to see that.
Yeah.
Yeah, it really took me back to being a kid, watching that stuff. Because that's really how I learned how to dribble a basketball at the beginning. Because it was just that what was on, you can watch on TV.
Watching those mixtapes. Those are crazy.
Yes, the mixtape.
Yeah.
Yes.
That 98, 99, 2000, that's what was it, 7th and 8th grade and freshman year in high school, and one was big. That was big. I mean, was it $60 for shorts,
Yeah, you had the Starberries, and you got the big T-shirts to put the basketball in and go all the way around. Oh man, those are the days. Darth, I'm looking at Key Corp, man. I'm liking it. Looking at Key Corp, looking at Truist now and SCHY.
I think I'm going to be buying Truist tomorrow. I like it. No, I like it. I'm telling you, with regional banks, bigger is better. And the more states they have, I see them as in better shape usually. It's like realty income. It's like, look at how many things, how much their diversification, how big they are, They're in Puerto Rico. They're in United States. They're big.
They have 7 buildings in it. I did a 10K overview on Twitter about realty.
Nice.
I know a lot about, even though I don't own them. I just know a lot.
Why?
So are you going to buy at some point or what? What's the verdict?
I'm just not a huge fan of REITs.
Oh, good.
You've told me that, and that's fair. That is totally fair. That is.
Although, I'm a lower income earner, so I wouldn't pay any taxes on them. Like I really wouldn't pay like any taxes. It'd actually be cheaper than like the qualified dividend income.
You should do it then.
Yeah.
So dividend dog, speaking of taxes, I did take a loss on purpose with Zim and then rebuy it just for tax, at the end of the year. I was like, oh.
I did that with MPW.
That's not allowed. That's not allowed, is it? I mean, you got to have you have to have a waiting period. I mean, I know you
you got to wait 30 days.
30 days,
or 30,
right?
I need 31 days.
That's it. 30 days in the U.S.
Mm-hmm.
Yeah.
Same in Canada, I think.
Is it 30 days? I thought it was 90 days. Is it only 30?
I don't know in Canada. Here it's 30, but
But is it 30?
I don't trade in Canada. I just buy my RSP. So
would you be allowed to do it if you're in and out of a stock constantly, or would they then consider that to be that you're doing that as a business, so to speak?
I think as long as you give it 30 days, I think.
Yeah, as long as you give it 30 days, it resets.
I'm pretty sure it's 30, but I always ask my financial advisor just in case. Because
I always go 31, just to be safe.
There you go.
It's because it's like a month, right? Is a month 30 or 31? Let me get 31.
Yeah, yep. 31.
It's fucking February. Come on.
Yeah, you just never know.
So speaking of REITs, any of you guys have NNN REIT or looked at NNN? That's
I was going to ask you, Darth, about another monthly REIT like NNN. Have you looked at ADC, or do you own or anyone own ADC?
Absolutely.
Okay.
I would consider them a rival to Realty Income because those guys.
That's what I was thinking after looking at their their investors report.
So right in, was it 2021, at the start of 2021, they were quarterly dividend. And they said, we're going to be a monthly dividend stock. That put them on the map because I never even heard of them. I just started searching like monthly dividend stocks and I saw Agree Realty Income. I'm like, holy cow. Like their dividend growth is actually better than Realty Income, and Realty Income's way bigger. I was like, what's that? ADC.
Okay.
And they're getting bigger too. I mean,
they are.
And their portfolio is like a mirror image of Realty Income.
Yeah.
Exactly. They got some Chick-fil-A's in there too. That's what I really like.
That is good.
A way to invest in Chick-fil-A. That's interesting.
So like Realty Income is sitting really like if a big recession or something happened, they would probably be because like half their buildings are like fully paid off.
Yeah.
Yeah, they're strong.
Outs them to like pay for other stuff. Like I'd have to read their like other filings. I do an absurd amount of research before I buy.
Love it.
I can tell.
Great.
Yeah, no, dude, you kill it, man.
I probably days, even if it's like a small amount of money. I just like.
And I can only imagine by the time you're 30, what like the knowledge you're gonna have. You're putting this much work in now. Like, man, put some.
I think he's King the Conqueror in disguise.
Yeah.
So Realty looks pretty interesting because they had a huge drop during COVID, right?
Yeah.
And they haven't come back yet.
Haven't really come back, and they're trading down. Why are they trading down?
That's why I've been buying REITs
right
and financial sector stocks since the pandemic hit. I've just been buying them like crazy.
If you look at all their notes, like I think they have one note that's at like 3-point-something%. Like for the notes are just debt, right? And so like all their debt's extremely cheap, so they don't have to worry about that.
They're paying over 5% yield at today's price right now.
Yeah.
Nice.
I'm sure if in yield theory, like it's
right.
I'd have to that one. I started using that metric because
I like it.
I can't remember. Someone who works with Warren Buffett, and this lady made it really popular. I read an article about it, and now I'm just kind of experimenting with it.
It's fascinating. Dividend yield theory, you said?
Yeah.
Yeah, it's fascinating. Yeah.
The lady who made it popular. I'm really bad with names. Not gonna lie.
Yeah. No, I never heard the name before. I've heard the theory, but I didn't know who came up with it.
Gen X Dividend Investor. He's a YouTuber.
I watch him. He's great.
He made a video about it, and that's what I get a lot of my information from him, like ideas.
He's good. He's really good.
Brilliant, man.
He's the master. I'm the apprentice. I always joke around about that. Him and I have had some serious talks. Like,
oh, that's awesome.
Like he taught me how to invest. Like I would in the beginning in 2019, we'd be in like chats and stuff. And I didn't, he didn't offer, he didn't want any compensation. Like we just had talks like, oh, this is what I started investing in. He's like, why? And I'm like, well, this and this. And he goes, no. And I go, oh, okay. I'm going to listen to this guy.
Yeah,
Were
I
you
remember
part of his Patreon or anything, or you just
I
chatted
was
with him?
not. I
No?
was not at all.
I am part of his Patreon.
Oh, cool.
I'm trying to get the king seat because I kind of want like just other access of his stuff. But like
It's good.
they're
It's awesome to see but somebody just doing it, like living off dividends and really doing it. And
Yeah,
he's
he's
been
a
doing it for a
beast.
long time, and he knows his stuff, and he's taken every criticism. He can handle all of it, and he just knows, right? It's like,
No, he's a
I'm
beast.
doing it.
The only time him and I don't like each other is during Ohio State Michigan week for football. That's the only time we joke around about that, but that's the only time. Ohio State and Michigan, Dave, they're big rivals in college football. It's like the biggest rivalry in all of sports, probably, is Ohio State, Michigan.
Yeah, I'm sorry, Darth. I'm a Michigan guy too.
Hey, I like Michigan. The only time I don't like them is during Ohio State week. I
I went
really
to
do
school
like
in
Harbaugh.
Windsor, right across from Detroit, so I'm a
Nice.
Michigan guy.
No, I really like Michigan as a program. I'm glad that Harbaugh turned them around.
So a question about REITs. Are there a lot of REITs struggling? I don't know a ton about REITs.
So I was actually going to jump in there with REITs because during the pandemic, I kind of made a bet that at the time I thought was a smart bet that, hey, you know what? There's a lot of office REITs right now that are trading low because offices are empty, people are working from home. And at the time, it looked like a really great investment because I'm thinking, at the end of COVID, at the end of the pandemic, people are going to return to the office, and they're and it's kind of like, sure, there's still going to be work from home, but people are more or less going to return to the office. And so what happened, sort of more or less in this last whatever 8, 12 months, the pandemic has ended, quote unquote, and I have not seen that return to office that I was expecting, and so I had some that actually went really did really well during actually, like, sort of during the end of COVID, and then now, like, later on, it's all of a sudden, "Oh, these offices are not returning to the form that they were expecting," and I've actually just had, Boomer, you probably know TNT, .UN, and it just went for, I think, a 50% dividend cut. It's like, ooh, as we all know, dividend cuts aren't really fun to live through. We live for the dividend raises and not the cuts. So
Yeah.
I guess that's my 2 cents on office REITs anyways.
How's that big one you have? Like your favorite stock is a REIT, I know, right? How's it doing?
Yeah,
It's a
Ryokan
mall.
is definitely one of my top favorites, and they are primarily retail, and they're actually trying to expand. I actually sent out a tweet yesterday. There was an article on Yahoo Finance about them trying to expand into building residential, like apartment buildings and condos and whatever as well. So I'm still pretty confident in Ryokan because they don't, in their portfolio, the slice of office space is probably less than 1%. Retail is probably 75 or 80, maybe even 85%. And then this little chunk of residential that they're trying to expand. So yeah, Ryokan I'm not worried about, but some of these office REITs where you're like, you think it's a good bet in the pandemic when offices are kind of low and you're thinking, well, and eventually someday and people will return to the office. And that didn't really happen as much because people said, I like working from home. I'm going to keep working from home.
Speaking of
cut costs, for rent and stuff too.
Have you seen like bigger companies that are starting to talk about doing leasebacks to like survive?
It's going to be. I mean, I still am very anti the office space. I'm just sitting in an office that we use, but like our next door neighbors in this office building, they were. The company still exists, but they're a company that owns lunch places that are in city centers in Canada. They own some little restaurants that are all lunch places, and their business has been killed since COVID, and it has not come back. And so they gave up their office space, and I think just they run their office out of their home now just to save the rent because their sales collapsed during COVID. They went to zero because their places were all closed. And then after they've opened up, downtown cores are very quiet. Downtowns are not busy anymore. I think it's something, there's lots of graphs on the internet showing, but it's something like 60% of people have returned to work, something like that, into offices. So big companies like the big accounting firms like Deloitte or the big law firms or banks, if they have 9 floors in an office building, when they renew, they're going to go down to 7 floors.
Yeah.
And there's going to be, I think there's going to be a lot of empty office space for the foreseeable future. I mean, it'll get eaten up because people will stop building office buildings. And then you talk about RioCan going. So one thing, RioCan, a lot of their retail is like strip mall type retail as opposed to the enclosed malls, which
it's sort of like the Simon property of Canada.
Yeah.
Would you say?
Because enclosed malls, I mean, RioCan's it's got all different things, but enclosed malls they've struggled a little bit. I think most of them are back now, but strip malls did well through COVID because people were outside. And but RioCan, when you talk about that thing yesterday, their boss was talking about how difficult it is to build residential. And we build residential, so we build homes. One of our businesses is building homes, and like we're trying to get our next phase of a development with this town that we're building in, and it'll take, I think it'll take 3 years before we're building the next phase, even though we've been working with them for more than a year already. And it's just like, because they don't fucking care. Like everybody that works for the city is in the government union getting paid whether they accomplish anything or not. And it's slow. And so it's going to be a long transition for RioCan to start building much in the way of, unless they buy out some company. If they buy out some company, it'd be different. But if they just organically try and start that business, it's going to take them a long time. They won't have anything for sale residential for years.
That was loud.
And that's kind of the point of that article. You saw that tweet that I sent out yesterday with the CEO from RioCan. Just curious, what municipality in the Lower Mainland is it that you're working with?
Well, our main development right now is in Seashell, so on the Sunshine Coast. But we've built lots of stuff in Richmond, and we built stuff out in Chilliwack and stuff. But our main thing right now is in Seashell.
Yeah. So just for those of you who don't know, like the Lower Mainland, Vancouver area, there's all these towns around. There's never been any amalgamation there, so they're all independent towns. So you have Vancouver, Burnaby, Surrey, West Vancouver, North Vancouver, Richmond, Delta, like the list kind of goes on. Maple Ridge, Pitt Meadows, and they're all their own municipality, right? And they're all kind of within an hour and a half drive of each other. And Langley, another one, and so you're dealing with a different municipality or I guess town, city council for every single one of these municipalities, right? It's got to be just a
wow.
Yeah, it's a
ginormous headache.
Sounds like it.
Does Vancouver have like weird zoning laws? Like one of the reasons like Colorado, that's where I'm from.
Okay.
Is like so expensive is because like you can't build 800 square foot houses unless you own like an acre of land, which kind of defeats the purpose of like small homes. So like, do you guys have like, since you work in the housing development, does like Canada have weird laws like you can only build certain big or?
Well, I would say one is the houses are built to a way higher standard. Like we did a development of like we built 50 something houses just across the border, and they were the shittiest things we've ever built because that was allowed. It's just they were in Blaine, right across the border. It's the border town where the
border town
crossing is, and we built all these houses down there, and none of those homes would be allowed to be built here. Like the standard, the spec for the homes was so low of what people buy down there. I mean, shit is cheap in the States. Houses are expensive here, so they're built to a way higher standard. There's a rule against everything. Like there's literally a rule against everything, and so funneling your way through all those rules to get where you want. Yeah, Vancouver's got it's building expensive. It's other than maybe Silicon Valley and Manhattan, it's the most expensive housing in North America.
Wow.
So like an average house on the west side of town, and the west side, not just a tiny neighborhood. That's like the western half of the city is an average house would be $3 million. And that would be like a house, a tear down. Like if you bought a tear down on the west side, like a 75-year-old piece of shit that's going to get knocked down, that's going to be $2.5 million.
Just to buy the land. just
to buy the land.
just to
So
have the
nobody
privilege of tearing it
will.
down.
I'm not sure if you remember, Dave. So do you remember the white spot that was right outside of Stanley Park on Georgia? Right outside of Stanley Park, there was a white spot there.
You're telling me it's not there anymore?
No, it's gone. So they sold that piece of land where the restaurant was for $245 million for that one piece of land.
Like that's prime real estate right on Georgia,
Yeah.
downtown, right outside Stanley
Yeah.
Park. Like that's
But
the most prime, one of the most prime real estate spots in all the city.
And what's being allowed to be built on there is like 2 towers with 300 units. So they paid almost $1 million per unit for the land cost. So the cheapest condo that's going to be in one of those buildings, the cheapest one possible, is going to be at least $2 million, at least, because they spent $1 million just for the fucking land. They haven't built a building yet.
Wow.
And so it's completely ridiculous here.
Yeah, there's some weird regulations too, even in the United States, because there's one of the hospitals that I worked at the time, they were going to expand and build a health and wellness center, hospital owned. And then it was going to be a regional site like in Northeast Ohio, but they couldn't build it because there's this endangered bat that lived in this tree. So they had to wait like 5 months, until this thing was gone to build this. I mean, they have some weird regulations as well.
You buy some cats and let them loose on the property.
Like it's absurd. Like they'll be like, "Oh, you can't build because there's this endangered rat species that's all over the nation, but it's endangered in this one county, so you can't build."
Yeah.
Crazy.
What?
So Investment Cage, being in Colorado, speaking of REITs, Innovative Industrial Properties is a really good industrial REIT, and that's big in the cannabis. And I like AFCG Gamma as well. That's a mortgage-backed REIT. I haven't looked at. I still not a fan, or what do you think?
The cannabis industry is really extremely tough. So it's not federally legal in the U.S. And so, yeah.
What did that say? What did that say?
I'm investing in the cannabis industry. I'm reading up on it.
Yeah, it's really.
Wait, no rush. No rush.
I will only
definitely. What this book is, read a couple chapters. Literally no rush into this industry.
And the nice thing about these REITs that have pretty much these landlords is, certain companies are not doing well financially, marijuana companies, but they got to pay their landlord.
Yeah.
Just like AMC, they got to pay their landlord, EPR Properties. So just remember, you got to pay your landlord.
By AMC, I think it was AMC. It was some theater, right?
AMC, yeah, their EPR Properties is a major landlord for AMC, and a lot of REITs are too. So just make sure, I always piss off the AMC investors on Twitter and say, hey, just remember, you got to pay your landlord.
All right, guys, I'm going to take off.
All right, take care.
Peace,
Hey,
guys.
nice
Thanks a
meeting
lot.
you.
Happy birthday, Dave.
Thanks so much for being here, Craig. I truly appreciate everything that you. I truly appreciate everything. So thank you so much. Thanks again for all those buy me a coffees today, and thanks for being here for the 50th birthday party.
Yeah, it's exciting. I was going to get Supergirl Investor on here, but she's sick. But I was going to try to get her on finally. Hey, very nice meeting you, Stan.
Peace.
Yeah, I got you guys, but I'm looking at VNQ, which is the Vanguard Real Estate. Do you know or read more about it? You know how that's structured? Is it market cap structured, or because I see Beachy is it's like top 10 holding, and then those are really the only two I know. I mean, I know what American Tower Corp is.
I got American Tower in my IRA.
Me too.
AMT.
I like AMT.
See, the thing with VNQ is, I mean, their dividend is.
They got laggers at the bottom, I think, that are like a bunch of reset. I don't think that'll be valuable, and I think that'll hold it down.
Yeah, and ETFs to see what the holdings are, because I like to look at institutional investors and who owns who. And
what's your percentage of institutional investors that would be? That's like a green light for you. Is there a percentage that you look at that I have to own it?
Just kind of, I see if a lot of institutions own a stock, let's say if a company is is owned, they're more likely to try to help you because everybody in Wall Street's like friends with each other. I think they're. I don't know this for sure, but I feel like they're like, oh, hey, this down blah 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 percent. I want to help their buddies out. And so, like, when I see a company that's like really heavily institutional, it kind of makes me feel a little because I'm like, oh, this is not as likely to be as volatile. That's not always the case. Like, there's other factors, but
Right.
I just kind of see that's like, oh, okay, so it will probably be not as volatile as something who's 90% like just the like individual like retail investors because those are super volatile. Now, like, if you go on like my M3X, they briefly. One of them, like I chatted with one of them, and he was talking about how he only trades like companies that are 90% retail owned or 80% or whatever, just because really easy because you're dealing with emotional humans.
Yeah, that's a fair game there. Yeah, you're right.
I don't have a lot of data about this. I'm kind of talking out of my butt, right?
I mean, it's not really talking out of your butt. No, I mean everyone has their facts on what they look at as far as like indicators.
But like it's not something I factor into like buying a company at all either. It's just kind of like, okay, it's 60% institutional. It's like a reinsert shirt. It's like when you're a little kid, like you have a little light, just even though it's a little better or whatever.
I got you.
Yeah, because like if I see something like GameStop at one point was like really heavy retail people, it was like 70% or something like that, and so that's why you could just trade and like, it's just super out of the. But I don't know a whole lot about that because then that deals with candles too. One thing that some people do is they'll look at like really small stocks that are like under 50 million shares. Literally, if somebody buys like 10 grand worth of stocks, it can move it up like.
Wow.
Even
there's so many loopholes that you in the market that people do and just try to that tries to get stuff out. I got some thing in my
is traded a lot in small cap stocks and like you ride those waves. He's really interesting to learn about. So, but like that's why like if you look at like the small cap, I posted a long time ago like small cap stocks have performed better. It's because of there's just more volatility. So that's just something I don't know about it. I'm just trying to learn.
Yeah, no, you're good.
Yeah,
man.
you got a lot of time too, being young. You're in good shape.
Yes.
But it's complicated, at least for me right now. Anyway, see you guys.
Great talk. Have a good one.
See ya.
See ya. I'm actually about to go grab some dinner too.
I'm actually at work. I'm supposed to be doing stuff, but yeah.
Dave, it was awesome. Thank you.
Yeah, thank you guys so much for coming on.
Yes, nice meeting you too, Dars. Boomer, nice meeting you as well. You guys have a good night. I will see you guys on the tweet.
In the Twitterverse. I do have one quick final last question for Boomer. How long have you been in Vancouver? Like your whole life or?
Yeah. My parents are born and raised here as well.
So nice. So obviously you and I have interacted on the Twitter about, and you know, I saw that putting green. You're like, no, it's my backyard. And I was like, okay, which golf course? And you're like, no, literally, it's my backyard. I'm like,
exactly.
That's
We redid the yard. We redid the yard a few years ago. That's awesome now.
Yeah, it was a good good showing of people. I mean, man, we had some high rollers in here.
It was good.
Yeah.
It was great. And you know what, Darth? If I had known, you know what I can do, because I have the first level on Restream, is I can actually pair other YouTube channels. So I could have paired your channel onto this if I had known you were going to show up. But this was all kind of thrown together last minute. But
you can do that again in the future. Like there's a little bit of a time lag. I felt bad for interrupting Stan, but Supergirl Investor is sick, and I was gonna try to get her to jump on here, but we'll try to get something going.
Yeah, for sure.
She's another young one. She's 25 years old.
Yeah, it's amazing with all these like these young guys, like Henry. I talked to Henry a fair amount from Henry Invest. I think he's called.
Yeah.
He spends a lot of time analyzing. He was on your podcast. He spends a lot
Yeah,
of
he
time
was on the
analyzing.
live with the young guns.
Yeah, and he's like 19 years. He's a
Yeah,
year older
late.
than you're
Yeah,
older
late
than
teens.
my son. And I don't talk to my son about this, like, right? I'm talking to him about stocks and stuff. It's interesting. Like, the internet's giving you guys. Well, none of us are all that young here, but it's giving these young guys. One is a platform to invest, but the second is all this information at the fingertips.
Yeah.
So,
and it's teaching them discipline.
Yeah,
and the ability, like, they've had to learn the ability to sift through the misinformation too, because there's a lot of misinformation on the internet. So they've learned to be, what's the word, like, diligent, I guess, to figure out what's the truth and what's less than the truth, right? And
you hope.
that alone is a valuable life skill, right?
Yeah, it's going to be a necessary one going forward.
Yeah, for sure. So
right,
again,
boys.
guys, thank you guys so much for coming to my 50th birthday party.
So this
And-
is it. So what do you get for your birthday? What are you doing for your birthday besides this? Doing
Oh,
anything
actually,
else?
this coming weekend, I'm going out to some family, and we're having a little family get together. And then
Nice.
today, when I was at work today, my stepdad was here, and I came home to like a little mini barbecue on my kitchen island. So I'm gonna
good.
fire that up. I'm gonna take that outside and put some. I got a couple full propane tanks, so I'll hook up a propane tank to the little mini barbecue. And I was not expecting that at all. I was like, I had no idea that my mom and stepdad were gonna get that for me for my birthday. So
That's awesome.
So
nice.
You're in northern Alberta now, right? Are you in Alberta? No.
No,
Where are
I'm
you?
I'm in Ontario. I'm
You're in Ontario.
2
still,
hours
right,
east of Toronto.
All right. Okay. Oh, whereabouts? Are you close to Kingston?
We've had this conversation on Twitter, have we not? Or was that someone else? I am close to Kingston. I was actually born in Kingston. I was born in Kingston,
I
raised
don't think
north
we
of
had
the
it.
city.
But we were out
I
there a little
lived
while ago
in-
because we did university tours with my son. We went to Western, went to Queens, about a month ago. So
Nice.
Queens was quite nice. Western's okay, but he's accepted to go to Western, but he may change his mind still. But
Yeah,
so.
no, I love Kingston. It's a beautiful city, very historic city. I was born there, so I'm a little bit biased.
Yeah.
And yeah, no, I'm about an hour west of Kingston, 2 hours east of Toronto.
Which town are you in?
I don't really want to dox myself.
Oh, okay, that's fine. No,
I'll DM that to you later.
no, it doesn't matter. No, I probably drove through it, driving from Toronto to
Oh
go
yeah,
to
you
Queens.
definitely would have. Yeah.
Yeah.
Okay,
Right.
guys. This has been amazing. Thank everyone so much for being here. Everybody that popped in in the studio, and all the guests in the chat has been just very fun. And I will catch you guys around the Twitterverse.
All right. Thanks. See you, boys.
Subscribe.
All right.